August update. What did July show us? Last week, developers wrote a note to ye old Carney and our once beloved, oh so dreamy Mayor of Vancouver, Greg Robertson. What is the point? To show that you have a city that's reached $3,000 a square foot in real estate in its luxury department, or that the people living in the city, of course, can ever have a chance at actually owning that toilet, that kitchen, anything of their own, as opposed to just renting from the rich foreigner. Ladies and gentlemen, August 2025, Vancouver Real Estate Market Update. We are back. The last time we saw each other, we did the pre-sale episode. I'll cut to that right now quickly.
Now we're in this market where there's 17 taxes. If you combine federal and provincial taxes, there's 17 of them.
Are we in a housing crisis? I want you all to go back, have a listen. YouTube wouldn't let me promote the video because apparently it was US political talk. I don't remember saying anything along those lines, but the lines have been drawn in the sand. So I request you go back, have a look at that. Much insight into what the pre-sale market looks like in Vancouver today, how it all works, from Matthew Lee over at McDonald Platinum Project Marketing, McDonald. The biggest pre-sale marketing company in the city here. We'll link to that as well, which also ties into a little our current events section we're going to go to at the end of this. It's got the developers on their hands and knees begging the dictators up top for foreigners to come back to us. So we'll see what that's all about too. So let's just jump into the August update. What did July show us? Some interesting words from Andrew Lees, Greater Vancouver Director of Economics and Data Analysis. The June data, Jesus. The June data shows early signs of sales activity in the region turning a corner. Italics, bold, okay? These latest figures for July are confirming this emerging trend. With rates of homes coming to market holding steady in July, the inventory of homes available on the MLS stabilized around 17,000 listings. This level, housing shortage, remember. This level of inventory provides buyers plenty of selection to choose from. Although sales activity is now recovering, this healthy level of inventory is sufficient to keep home prices trading sideways over the short term. So, we're not seeing a 50% drop. We're not seeing a 50% increase. We are holding. We are seeing those sales numbers pick up. Why are they picking up? Your guess is as good as mine. Rates have been held. The geopolitical circumstances in Canada are as dire as they have been over the last handful of months. I think it all comes back down to there's always people in the pipeline wanting to do something. How long can you potentially wait for until you just say,
you know, my pre-approval's in place, I've got the money, let's just start paying off that mortgage and building equity instead of waiting for the assumed inevitable collapse.
So, July sales, we have Greater Vancouver numbers. Sales in total are down 2.2% year over year, 14% below the 10-year. Detached, we are down 4.4% year over year. Apartments, we're down 2.9% year over year. And townhomes, we are down or up 5% year over year. So, year over year numbers, we're still deflated. However, as we are pushing through 2025, month over month, we are seeing that progression back, and we are seeing what looks like a floor in sales activity. So, new listings in July, 5,642. That's basically on par year over year. And that's 12% above that 10-year. So still ample inventory when looking at that 10-year average, as we are still on that high end. So currently we've got a total of, as just stated, 17,168 listings in Metro Vancouver on the MLS. That is a 20% increase year over year, or 20% above, I should say, the year over year average. And that is 3,000 listings over last month. So as we push further again, even though it doesn't look like it today, into those summer months, we've got that typical inventory push. It's sunny out, you've got a nice view, you've got a nice yard, you've got a nice exposure. This is the time to advertise it. The biggest question is, what price points are you coming on at based on the comps and the climate? But we have seen a floor in sales, and is it up from here? I don't know. I don't think it's down from here. It's definitely sideways from here, but we will see. It's positive either way. Sales to active listings ratio, detached market, Greater Vancouver, is the only segment currently in a buyer's market. And we've got balanced markets at both the apartment and the townhome. So balanced in strata, buyers in detached. Always interesting to see. Benchmark pricing, essentially on par month over month, and all down year over year, in and around that 2.5% to 4% range. Benchmark detached price, Metro Vancouver, 1.974 million. Apartments, 743,000. Townhomes, just shy of 1.1 million. That's it. That's it. Now, current events. Last week, developers wrote a note to ye old Carney and our once beloved, oh so dreamy Mayor of Vancouver, Greg Robertson. Gregor, his friends must call him Greg. Federal Housing Minister now. He's looped his way up the chain of command to that federal level to allow foreign buyers to come back into the market. That letter came 1 week after a group of 27 well-known Metro Vancouver scholars, I'd like to be a Metro Vancouver scholar one day, huh? Retired city planners, not presently working, retired city planners, urbanists, developers and architects send an open letter to Carney and the Federal Housing Minister urging quite the opposite. So their note was, do not reinforce foreign capital or investor demand to reflate prices artificially, said the group of veteran BC housing experts. The current market correction presents an opportunity, not a threat. So they're stating that there's an opportunity to make a shift, and this is not a threat to the market, but an opening to not bail out those speculative-ridden luxury towers, but to start moving forward with more affordable options. Again, going back to Matthew Lee's conversation, very difficult to see how that is going to play out. But rental options and more public subsidies they're talking about for longer term public favored outcomes, which I assume means more rental, more subsidized. In contrast, the developer letter, penned by some names you may know, Westbank, Westbuild, Edgar, Amicon, Cressy, and Polygon. Developers spell out how foreign investment has long been crucial to the BC residential construction market, largely because it has provided the capital to start large condo projects. So as you'll remember, or maybe you won't, way back when the market was rolling, we had money laundering just pumping through the laundry machines on our beautiful shores here. Casinos were just pushing it out, as we have since found. And the word from developers was, no, foreign buyers are just a small fraction of the market. It's not a detrimental level. It's not manipulating our market. It's a small fraction of foreign money that has come in, and this is just us Canadians doing our thing. So now these developers have penned this letter readily acknowledging the importance of the financial mechanism that many BC developers have long tried to keep quiet. Many of their building projects have relied heavily on investors, domestic and especially foreign, to fund said projects. So again, going back to the Matthew Lee interview, how this works is they advertise a pre-sale building to come up. Some of them advertise domestically. Some of them advertise directly in their offices in China. We will not go into who does that, but most of you will probably know. They derive funds from whoever they can, a large segment of those being investors, and when they were allowed, a huge segment of those being foreign investors. So the developers do not build a building with their own cash, as you can imagine. They have loans, and they have loans with triggers in place that need to be hit before money is advanced. So you need to pre-sell X amount of money before we will give you the first large loan, and in turn, your legal process and your city process goes forward. But before you'll get your money, you need to sell X amount. So we are confident that this is going to move forward, and then we will advance and you can start building. A large number of that pre-sale, pre-development start money was obviously these foreign funded, specifically when we get to these points where we're averaging 2,000, 2,500, close to 3,000 a foot. Domestic market is long gone from that, and you're just dealing with that outside money coming from foreign lands who may have dramatically different tax situations, or why ever these people have the money they do. A variety of reasons there. It doesn't matter. Once it hits here, it enters the market and of course distorts the gap between the haves and have-nots of our own domestic population. So that's the nuts and bolts of how that all comes together. January 1st, 2027, we still have the foreign buyers ban in place until that was initially put in place 2 years, supposed to expire January 1, 2025. Trudeau extended another 2 years. So we've got, a year and a half left. So these developers are trying to get that off the table early to re-kickstart the market. Now, I think all this is going to do, I think it's very self-serving personally. I think they need to shift. If there actually is a housing crisis, I think there's an affordability crisis. Some people blend those together. I think they're two very different things. There's plenty of options available, but the money that these things are commanding is the struggle. Either way, it is hand in hand. Getting foreign buyers back in is only going to further distort the price points away from the domestic market. And what is the point? To show that you have a city that's reached $3,000 a square foot in real estate in its luxury department, or that the people living in the city, of course, can ever have a chance at actually owning that toilet, that kitchen, anything of their own, as opposed to just renting from the rich foreigner or the rich domestic, whatever. So they're trying to push the expiry of that foreign buyers ban a year and a half early. Now, don't forget, that's the ban. We still have, David Eby, of course, has gotten involved in this conversation that week as well. We still have the domestic provincial foreign buyers tax, which is 20% of fair market purchase price. So that's apparently says him going nowhere, no matter what happens at the federal level with the foreign buyers ban. If it's kept on, if it's implemented and pushed forward, if it is pulled off early, that 20% foreign buyers tax is staying in place. Again, my thoughts on this are that foreign money should not enter the market, specifically when it comes to residential real estate, specifically when it comes to a market that has already been pushed so far away from the domestic income levels, just making it that much different. And that's why we have peak migration of people out, inter-province migration out of BC. Very disheartening if you're a young person not knowing where you're going to make these millions that you're going to need to get into the market. That is it today. What do you think is going to happen? Are they going to remove it? Is there going to be capitulation at the federal level? We've already seen Carney has done nothing for us, but this is not a political talk. We'll see if he helps with that one or if he holds firm. Give me your 2 cents below, and I will see you next week.